Vegas.
Hey guys, happy Wednesday. Welcome back to our market review for the day. Gosh, there's so much going on today. What an amazing day. But before we continue, remember, this is just an overview of the markets and is not financial or investment advice. You should always consult with a registered investment advisor before considering anything that we talk about here and any other videos that we have. Let's get started. I will not actually be able to cover everything that happened today. If you are a retirement investor, first of all, if you have retirement accounts, I hope you'll consider us at Jazz Wealth. Not only do we manage your retirement accounts, but we also help you with all of your personal finance issues. Lots of great things we can help with there. So check us out at jazzwealth.com. But if you're a retirement investor, you've really got the best of both worlds going on here. The best of like four worlds, really. You have the markets heading higher, which if you have a long time until you retire, that's awesome because you're just building up a cushion for if the markets ever fall. Now, if the markets ever do fall, then you've got another great advantage because you have a long time until you retire. You'll be able to buy at a discount. So you really don't care here whether the market goes higher or lower as long as you have enough time until you retire. Well, the markets decided they were going higher today. And this is a very unique rally because it was one of the first times that we took the important sectors along with us. So let's explain. If we take a look at the S&P 500, S&P was up 26 today. The Nasdaq was up 74 on the day. Where did that end? Almost at new highs, not quite there. The Dow, of course, if we just look at one of the ETFs, the Dow was up 323 points. A lot of that basically happened throughout the day, but the last little push to push us into the 300s came here just in the last few minutes. Incredible day, all on economic optimism. Everybody very confident in the overall market and really excited about tax reform and what that brings as a possibility. Now, the sort of elephant in the room today, or we'll start calling it the apple in the room, that was Apple. Apple was up 1.65, though again, this didn't happen here. Actually, this was only up about 0.5% for most of the day. They really got their boost towards the end of the day as everybody decided, okay, market on close order to get in long Apple. Everybody decided to make that jump. Here's the deal. Apple decided, well, actually, they announced that they will probably add about $350 billion to the U.S. economy over the next 5 years. But really, the important story is they're going to pay $38 billion in taxes to repatriate the $250 billion that they have overseas. Now, they announced $38 billion. They didn't actually say how much money they're bringing back, but if you do some quick math, you can see that a $38 billion tax rate comes from about all the cash that they have overseas. So they're really looking to move everything. They're going to add 20,000 new jobs, and they're going to build a new facility, which if you've seen their other one, probably won't be anything that's average. It will be amazing. Here's the thing that I worry about. There's a lot of excitement about tax reform and bringing money back to the states, everything sort of growing our economy. This gives good reason for politicians to want to spend more. Keep in mind, the money they're bringing back doesn't take care of our deficits. So what happens, and this happened in the state of Florida, when we get a lot of money coming in, politicians say, oh, everybody's excited about money. Let's try to build some new stuff. Let's get all this stuff taken care of. We still don't have the money to pay for that stuff, but they'll figure out a way to work out something. So just watch how this happens. They'll be all over TV, all the Congress people. Once they agree that this is a good thing, they're going to start talking about how they're going to spend the money that doesn't even really help them reduce the money they've already spent, but that's for another video. We'll get away from that. Here's the reason this rally was so good. In order for you to have a solid rally that holds its own and really can give you numbers like we saw today, you have to have two sectors. You have to have the financials and you have to have the semiconductor stocks. Without those two sectors, which make up almost about 40% of the S&P or different S&P products, depending on how you look at it, you cannot have a rally in the markets. You can have little up days and little down days or whatever, but this sort of rip your face off strong rally does not happen without the financials, which you can see on the screen. Enjoyed a nice day today, but also the semiconductors, which really had a good day. It was very solid from the start of the day. Actually, your best performers in the S&P today were names like Lam Research. Let's see what they did. Lam Research, 7.7%. Applied Materials, we call it AMAT around here. AMAT up 5.2%. And then the last one, old CLAC, KLA 10 core, traders call it CLAC. They had a great day today, 5.4%. Semiconductors lock solid into this rally. So in the short term, if you're a short-term trader, this is how you have to see it. In order to get that momentum and continued strength, aside from volume, you want to see the semiconductors and financials moving in lockstep together, and that is exactly, today is a picture-perfect example of how you need that to happen. Unfortunately, it was not all good news. Let's take a look at Ford. Ford was your worst performer today in the S&P. It was down 7%. Here's the thing. Ford says that they're basically not going to make as much. They think that their earnings are going to fall in 2018. Let me see my notes real quick. The problem is the commodity costs. That's what you get for making a truck out of aluminum and not realizing what the price of aluminum can do, and other expenses too, of course. But they said their commodity costs are a little bit more than they had expected, and they plan on investing heavily in electric and hybrid vehicles. This is ambitious, and I think that's why people think they're going to wait and hold out for better prices in the short term. The company actually wants to put 16 new electric vehicles and 24 hybrids, one of which will include the F-150. They want to make that a hybrid. That'd be pretty interesting. That is, if you don't know, their #1 selling car or truck. And so it's very important that they keep up with the times there. At least they feel that way. In the short term, investors want nothing to do with a company that's not restructuring, but sort of revamping their future. In the long term, I think Ford will be okay because they're doing the right thing. They're moving, and they typically move pretty quick. Obviously, it's a very large, very solid company. So Ford suffered today, but, you know, it's what it is, just a bad day. Lastly, I'll cover the Federal Reserve. The Federal Reserve came out with their beige book today. They do this once a month, I believe. And don't hold me to that. I don't know if it's once a month. But they came out with their beige book, and almost nobody cared. It didn't matter. The Fed came out, the guy went on TV, and he announced what was in the thing, and immediately they went back over to Apple. So nobody really cared what they had to say. But what I cared that they had to say, number one, they said that the economy was growing at a modest to moderate rate. That's a good thing. The second thing is they're still concerned that inflation, now we can argue their inflation numbers and how they calculate this, but their inflation concerns were that it's still a little bit slow. Inflation is not over 2% as they kind of want. They're shooting for that 2% number, and they just can't get it. So because of that, what they said is, hey, despite all of that, we're still planning on raising rates 3 times in 2018. Go back to some of our other market review videos where we explain why that's important to know if they're going to raise rates 3 times this year or whatever, and how that affects your bottom line. I also did a great video on what it actually means. When the Fed raises rates, what does that actually mean for you? So be sure to check that out. That's all I got, guys. Government shutdown coming up on Friday. Expect more drama in the markets. Expect more drama from Washington. They're trying to pretend like they're getting along right now. Today was not a bad day as far as what they're agreeing to. It's not a done deal yet. There's some argument over a short-term bill versus a long-term bill. Some people want to just solve this thing once and for all. Other people just want to kick the can down the road for another month or so and figure it out. I really don't have any opinion on that. Just expect the markets to be a little bit more volatile. Well, that's all I got. That's been one of the busiest days I've ever had. How do you feel about the economy? How do you feel about the stock market? Do you feel it's overvalued here? Do you feel like you're chasing a little bit of a high price? Do you care if it goes lower? Tell me how you feel in the comments below about the overall economy as well as the stock market. I'm happy to look. I always try to answer every single question that comes up or every comment, so I look forward to it. Also, be sure to check out these 2 other videos you may be seeing up on the screen. Again, if you need any help with your retirement accounts or anything like that, feel free to go to jazzwealth.com. Thanks for watching.